The stock market closes every day at 4 p.m. It has for over 100 years. The bell rings, the traders go home, and if you want to buy shares of, say, Apple or Tesla, you have to wait until tomorrow morning. But what if I told you that right now, today, that rule is starting to break? What if I told you that as of this morning, over $1 billion in stocks are trading on a blockchain, 24 hours a day, 7 days a week? What if I told you that yesterday, the Nasdaq, the second largest stock exchange in the world, announced a partnership with Kraken to build a system where every publicly traded company could put their shares on a blockchain? And what if I told you that the US Treasury just told Congress that financial privacy is not a crime? And what if I told you that crypto exchanges are getting federal bank charters? And that the White House just personally called out the banks for blocking the legislation that would make all of this official? Hi, I'm Jess, and today we're going to get into all of this, and I'm going to break it all down so it's easy to understand. Let's get into it. So here's all you need to know about how the current stock market works, so you have a framework from where we're going to work from today. When you buy a share, say on Robinhood or Fidelity, it takes 2 full business days to actually settle, and it doesn't work at all on the weekends. That's the infrastructure the entire global financial system has been running on, built in the 1970s. Tokenized stocks fit that. A tokenized stock is a digital version of a real share that lives on a blockchain. It settles instantly. It trades 24 hours a day, 7 days a week, and it can be owned in fractions for a few dollars. That's it. That's the upgrade. And this week, the biggest players in finance started building it for real. In the last 72 hours, 5 separate pieces of this puzzle clicked into place at the same time. Let me walk you through each one. So first off, this morning, data confirmed that tokenized stocks have crossed $1 billion in total on-chain value for the first time. A year ago, that number was $32 million. And today, it's over $1 billion. That's roughly 3,000% in growth in 12 months. And right now, 2 players dominate. On the one hand, we have Ondo Finance, I love Ondo, at 58%, and X Stocks, which is Kraken's product, at 24%. Tokenized Tesla, Google, Nvidia, and the QQQ ETF all are trading on-chain globally right now. And Robinhood CEO said last fall he thinks tokenized stocks will become the default way people outside the US access American equities. And Robinhood is already live with this in Europe. The $1 billion isn't the destination. It's just the starting point. Domino number 2. Yesterday, the Nasdaq announced a partnership with Kraken to build what they're calling an equities transformation gateway, which is essentially a bridge that lets tokenized stocks flow freely between the traditional Nasdaq market and open blockchain networks. Think of it as Nasdaq and Kraken building the door between the old financial world and the new one. And their target launch will be H1 of 2027, pending, of course, the SEC's approval, but that's not far away. But okay, domino number 3. 11 crypto and fintech companies have received or filed for federal bank charters in the last 83 days. That is, we have Circle, Ripple, Bitco, Paxos, Fidelity Digital Assets, Bridge, that's Stripe stablecoin company, Crypto.com, Morgan Stanley, and more. A federal bank charter means these companies are now operating under direct government oversight. Institutional clients like asset managers and ETF issuers need to start moving real money on-chain, not a dramatic press conference. A regulatory approval form filed quietly, changing everything. And okay, domino number 4, the Clarity Act, the big crypto market structure bill that has been stuck in the Senate for months now. The core fight we know is over whether crypto exchanges can offer yield on stablecoins. The banks say no because they're jealous, and crypto says yes, it's the future. We know that last week I covered this in last week's videos. Coinbase's CEO, Brian Armstrong, met privately with President Trump. And the very next day, President Trump posted calling out the banks directly, saying they need to make a deal with the crypto industry. The CFTC chairman then went on Fox Business and said the bill could be on Trump's desk in the next couple of months. The Clarity Act, we know, is the legal foundation, okay, that makes everything else we've talked about today official and scalable in the US. Everything else is waiting on this. It is the linchpin. And domino number 5. Okay, yesterday, the US Treasury submitted a report to Congress that included this line, and it's a genuine policy shift. And I quote, lawful users of digital assets may leverage mixers to enable financial privacy when transacting through public blockchains. And this is so important because we know this has been a hot issue in crypto. Back in 2022, the government sanctioned crypto privacy tools, and the message was clear. Privacy is for criminals, they said. But yesterday's report says, actually, on a public blockchain where every transaction is visible to anyone, normal people have legitimate reasons to want privacy. It doesn't make them a criminal by default. So that changes what compliant on-chain infrastructure can look like, especially as institutions start moving serious money through these systems. But now let me zoom out for a second. All of this that I mentioned is happening while the macro environment is genuinely chaotic. A war in the Middle East, elevated oil prices, though we know they crashed recently as well. But there's still debate over what's going on in Iran. Now the son of the former Ayatollah Khamenei is allegedly dead. And then there were rumors of the Strait of Hormuz being opened now, but there's also rumors of this not being the case or not fully confirmed yet. We currently have a weak jobs report and a Fed that has very few good options. And the most influential macro thinkers in crypto are watching this closely and making some very bold calls about what it means for Bitcoin. We're going to do a whole dedicated episode on that. Let me know what questions you have. But I specifically want to hone in on some theories that Arthur Hayes has put forward, many of which I agree. But as I was saying, these, I believe, deserve a full video because this war in Iran, in the Middle East, and we know now President Trump is going to be meeting with President Xi in China. And it seems like there's going to be a peaceful takeover of Cuba. There's so much in the air. And it, in many ways, does seem like we're in World War III, though also Trump has said we have pretty much reached, how can you say it, a peaceful ceasefire or negotiation with Iran, all of which will be revealed in the next few days, I believe, because he does move very, very fast. But that said, on this note, and this is what I'm trying to allude to and what I believe warrants its own video, let me know once again if you're interested, is in the fact that if these wars continue, will the Fed therefore be forced, will the government be forced to print more money, which would be a huge injection of cash into the market, which we know historically pumps the market. But that said, okay, I'm going to leave you with this. A quote by Senator Cynthia Lummis, one of Bitcoin's loudest advocates in the US Senate. She said this morning, and I quote, on the record, she said, Bitcoin is going to increase dramatically. Now, someone with her position cannot make reckless statements like this unless they have reason to believe it's true. And that's why I believe her. So whether she's right or wrong, we have yet to see. But as I was saying, once again, okay, the simple fact she's saying a statement like that is a signal, if anything, on how far Washington's posture, opinion has shifted on this asset topic. So here's what to watch next as we start to wrap up today's video. The financial system is not being replaced. It's being rebuilt on faster, more transparent, and more accessible rails. It's being rebuilt from the inside out. And this week, 5 major institutions all moved in the same direction at the same time. And the 3 things, the 3 questions I'm watching in the coming weeks are: 1, does the Senate Banking Committee advance the Clarity Act? That's the next critical vote, and we know that President Trump last said he wanted it on his desk this month. And once again, I tend to believe him because of his track record in getting things done. The next question I'm watching and hoping for an answer is, does the Nasdaq's SEC filing get approved? That unlocks the 2027 launch. And thirdly, does the Fed give any signal? A rate cut, a balance sheet shift, that changes the monetary backdrop. Everyone's watching. So these are the levers. And right now, as I was saying, all of them, all 3 of them are in motion. So that's a wrap for today's video. Happy Monday. By the way, if this helped you see what's actually happening, how stories and narratives are connected, and what to be watching next, just let me know in the comments section. Give me a thumbs up. It means so much to me. And then, of course, subscribe if you want to see me make more videos like this and be alerted right away, which of course means you have to press the little notification bell. I love you guys so much, and I'll catch you guys here tomorrow. Take care.